Welcome back for section 26. After going through 19 CFR, as well as an introduction to the HTS US, now we're in a better position to talk about really the essence of customs entries, which is the classification and valuation of goods. Two of the most important activities related to preparing and submitting a customs entry are C and V, classification and valuation. Of course, classification being what is the 10-digit HTS number associated with a product description, and valuation, the price actually paid or payable for the imported merchandise. As we'll see in upcoming slides, the processes associated with both of these activities are heavily influenced by the international supplier's commercial invoice. In fact, this section is all about the vendor's commercial invoice. Last bullet, given the importance of the commercial invoice to both classification and valuation, importers really should have instructions in place with each overseas vendor on how to prepare commercial invoices pursuant to U.S. customs regulations. Whereas CBP has a number of commercial invoice requirements, classification is driven by the product description on that commercial invoice, and valuation, as we just said, is related to the price shown on that commercial invoice, also known as price actually paid or payable. CBP definitely has specific requirements on how to prepare a commercial invoice, and as a trade tip, we'll say that CBP's commercial invoice requirements are found in 19 CFR 141.86. Of course, what we're looking at here is an excerpt from ECFR that deals with commercial invoices. Not really a coincidence. We know we're in Title 19. We want to get down to 141.86, and then the details are listed. Instead of going through each and every one on an ECFR excerpt, we have them listed here, just a little bit more succinctly. What we see on the right-hand side, consistent with what we've done previously, is a smaller version of a commercial invoice that we're going to be looking at. Really what we're saying in the next couple of slides is that somewhere on the overseas vendor's commercial invoice, the information that we're going to go over has to be on that commercial invoice. The first is the port to which the merchandise is destined, what port in the United States they're talking about. Second bullet, this covers a couple of things: the time when, the place where, and the person by whom and the person to whom the merchandise is sold or agreed to be sold. In other words, in our sub-bullet, full name and address of seller buyer and commercial invoice date. Really important as it relates to classification. Last bullet here is a detailed description of the merchandise with its name, grade or quality, especially for agricultural products, along with any marks and numbers. This is the part of the commercial invoice that hopefully most closely aligns with the product description found in the HTS US. Without writing a book, basically, we want to have a description on the commercial invoice that any party can use, especially a customs broker, to properly classify imported merchandise. That is found on the commercial invoice. What else? Quantities and weight and measure of the country of shipment, or weight and measure of the U.S. That's just another way of saying that U.S. CBP accepts both metric and standard weights and measures. The purchase price of each item. The currency as well. This is where sometimes importers get off the rails a little bit working with their vendors because they don't explicitly state the currency of sale. We want that in there too. Last bullet, all charges upon the merchandise itemized by name and amount. We have an example of how that works, so not to worry just yet. Of course, we demonstrated this when we looked at the page excerpt on live animals from the HTS US. Country of origin of the merchandise is huge. Is it a country of origin with whom the US has normal trade relations? Or is it a country of origin that we have a special trade agreement in place with? Super important is country of origin. Second bullet, and this harkens us back to a subject we covered much earlier in this module, all goods or services furnished for the production of the goods, An assist, as we defined, such as dyes, molds, tools, or engineering work done outside the U.S. We have an example of that too. And as a rather lengthy trade tip, and this is a customs reg, by the way, when more than one invoice is included in the same entry, meaning several invoices from the same vendor or multiple invoices from different vendors, each of those invoices must be numbered consecutively by the importer on the bottom of the face of each page, unless, of course, it's submitted electronically. Each individual invoice must be numbered as well. Pretty nitpicky, but really not, because customs agents, customs specialists as they're called, might request electronic copies of documents, and they need to know and understand what they're looking at. This particular rule helps them to do that. Let's reiterate the importance of the commercial invoice to customs clearance with a supply chain perspective. By now, it should be clear just how pivotal a role the commercial invoice plays in the customs clearance process. Even in the age of digital documentation and e-entry filing, the commercial invoice remains the most important document related to classification and valuation. Second paragraph. Whereas USCBP does not initially require presentation of hard copy documents related to an entry, it is the information that is included in a supplier's commercial invoice that drives the entire process. As part of the trio of documentary information required by CBP, the others of course being the packing list and transport document, it is the invoice that shows critical information like the seller-buyer, product descriptions, price paid or payable, currency, and country of origin. Last paragraph. Be it in hard copy or e-format, it is the customs broker that makes the most use of the commercial invoice, converting the information found therein to populate the screens and ACE that constitute an entry. That's really the whole deal when it comes down to preparing entries. Given the direct correlation between the activities of the vendor, importer, and customs broker, it is a properly completed commercial invoice that determines the quality and accuracy of a customs entry. Hopefully, that correlation between a good solid entry and commercial invoices is now indisputable. At this point, we're going to have another supply chain perspective and look at a sample commercial invoice, and we're going to run through it and see what it contains. First off, at the very top, it says commercial invoice. That's pretty important. And then down the bottom, it's also numbered, which is a requirement of U.S. Customs. We have a seller, full name and address, Comercio Technology Partners in Lisbon, Portugal, selling to a U.S. company called Peabody Machine Tools in Peabody, Massachusetts. We have the full date spelled out, always a good idea to do that. This invoice makes reference to a purchase order number, the PO that the company in Peabody placed originally on the vendor in Portugal. Payment terms, 30 days from date of invoice. Delivery terms, those Incoterms, are DAT, delivered at terminal, Logan Airport, which is Boston's airport. Main mode of transport, air freight. Shipment date, June 21. Currency of sale, that's required by customs, the euro. Moving down. Product description, where we're looking for a good, solid, easy classifiable product description, a numerically controlled lathe. Customs requires marks as well. There's a model number there. We have gross weight in kilos, that's allowable by customs. We have measurements in centimeters, also allowed by customs. Unit price of 170,000 euro, using that euro symbol. And then customs also requires any additional charges itemized in the body of the invoice. Because this is a DAT Logan Airport Incoterm, the vendor has to pay for certain components of the international and domestic origin transportation. We can see inland freight to Lisbon Airport from the vendor's facility, 300 euro. Export customs clearance out of Portugal, 100 euro. And then air freight to Logan Airport, 1,500 euro. We'll see this in another example. International transportation charges are not included in dutiable value, but the commercial invoice is required to break those out. Country of origin, required by customs, Portugal. Full DAT price of $171,900. Our entered value would be less the transportation component, and assigned commercial invoice by the seller. This is a simple but solid commercial invoice because it contemplates all of the requirements we spoke of just a moment ago. Now we have a real-world example that asks the question, what's wrong with this invoice and why? This is an example of an invoice that has some mistakes. Mistakes in the sense that the invoice doesn't meet the criteria of U.S. Customs and Border Protection. Seller and buyer name, it's a company out of San Pedro Sula in Honduras. Sold to a company in Hialeah, Florida. That's Miami, basically. Calle Ocho Imports. Moving to the right-hand side, we have a full date. That's good. PO number, that's good too. Payment terms. Delivery terms, although this isn't required by customs, when we use Incoterms, we always want to have a named port, place, or terminal at either origin or destination. FOB, free on board, means nothing without, in this case, parenthetically stating the port of loading. Also, we will recall that customs requires the port of destination in the United States. We saw that on our previous example. It was Logan Airport. In this case, it's not listed. So that is a violation right there. Let's look at the body of the invoice. Quantity, 2,000. Well, 2,000 what? We don't know because the product description is in Spanish. Product description has to be in English. It happens to mean shoes. Calzado means shoes. So our quantity technically would have to be 2,000 pair of shoes. It has a style number. That's fine. Gross weight, 1,500. 1,500 what? Kilos or pounds? We need to distinguish that. The measurement just says 200 boxes. Cajas is boxes. The extended price, 15,000. No currency of sale. That's another violation. And we'll notice missing in the body is the country of origin. This was done intentionally to point out how a customs entry can get screwed up from the get-go, based on the information provided, or not in this case, by the vendor who prepares the commercial invoice. Just a good contrast to the previous slide that we saw, this time pointing out some things that are wrong and that are likely going to foul up our entry. We'll stop here, and when we get back, we're going to learn how to classify goods using the HTS US. Some good, solid technical stuff.